Welcome and
Awesome.
good morning. Right. Very sorry for the first of all, there were two causes of delay. The first one, unfortunately, I had not been informed of fumigation that was taking place throughout my area. So you'd find that I couldn't be there whilst they were doing the fumigation. The delay, that's why I said half past the other time. Then by the time that I was starting, then I had a problem with my speaker. But it's something that does not, that is usual. My apologies for that. I know that it will have disrupted your day. Very sorry. I might have to mute you all in case there's background noise. But please, when you want to contribute anything, feel free to unmute yourself. Right. This will be our first class for FAC 1601. Right. Also note that we are private, separate from UNISA, although we teach on material that is covered there, right? So we'll be covering the syllabus, all that you do in your FAC. It may be 1601 or 1602. Our sessions are online. Under normal circumstances, unless it's a holiday or there's a problem, they are done twice. On Tuesdays at 5 in the evening, and on Saturday, normally I start 10:30, not 10 o'clock. It was just today that I started at 10. So Saturdays, normally I start 10:30. Right. In case you miss any session, all sessions are recorded. All sessions are recorded. All sessions are recorded. And either at the end of that very day or latest the next day morning, the recording will be posted in the group. So you'll have access to all recordings. All documents that are used in class will also have access to all those documents. Then towards assessments, we also do practice questions that are almost similar to what you can expect in all your assessments. So you'd find most probably the last two sessions towards the assessment, I normally dedicate them to practice sessions for the assessment, or alternatively, I can do it during the weekend of the assessment. Normally, your assessments they can be out on Saturday. So what I try to do is to make sure that we do similar things so that you understand, so that you can also be able to do those assessments on your own and understand what you are doing. It's one thing to maybe have someone do everything for you and you don't understand. And another thing, if you have an idea of what is happening, because you might need some of these things. Some of you want to go on and be a CA or be whatever you want to be in your field, and you might meet these things. So it's really important that classes are attended. So when you are in our permanent group, I think we've got two groups, permanent and temporary. The temporary one is only for 3 weeks. So I think it will be disbanded towards the end of this February. But the permanent group, we can be able to communicate. In the temporary group, only admins can communicate there, but in the permanent group, you can also communicate. And if you're part of our permanent group, you can also be able to ask questions 24/7. So even when you are not doing class, you're practicing alone, you can also be able to ask questions. You will be available for each other. And if you've got any specific problem, if you're part of the permanent group, you can contact me, Eugene. On Monday, I'm free at 3 o'clock. Are you free? Can we do this? As long as our time is common, we find common time, I can attend to your personal issue. We can even have a one-on-one session on areas that you have problems. But of course, the one-on-ones are not a permanent. It's just for those areas that you feel that you really need to talk to me. But most of the things we do through the group classes, which I said they will be done twice a week on Tuesday and on Saturday. Like the next session after this one is definitely on Tuesday at 12 o'clock. We'll have another session. All recordings will be posted in case you miss, because I know that the Tuesday ones we've got problems with some guys that maybe they no go fit for. We've got a lot of classes, so there's little room to change the timetable. So you find that if you arrive a little bit late, you can always catch up with the recording. The Saturday one, it's at 10:30. If you miss, you also catch up with the recording. And after the recording, if there are problems, you are free to inbox me, and then we can be able to discuss. Right. So I can say that's it. We cover all. We try by all means that if time permits and there are no usual problems like the last time there was no load shedding, we try to make sure that we cover everything. But normally now with load shedding coming in, there can be a problem that we miss 1 or 2 classes and we are not able to cover them. But we try. But let's say there's load shedding on my side, we can postpone. I can't. There's nothing that I can do. I will postpone class. But as soon as I can then arrange maybe another extra class. Usually the extra classes I arrange on Sundays because that's my free day. We can't arrange midweek during the day and after hours because my after hours timetable for during the week is full. And during the day, most of you are at work. So we'll get, if we have to compensate a class, normally we do it Sunday, but we try by all means that any missed classes for whatever reasons, I will be able to compensate them. Right. Before I continue to the stuff that I need to cover today. And anyway, when I'm doing this session, please, and if there can be network issues, you can see that maybe for a continued period of 2 to 3 minutes, you can't hear me. Of course, if it's just a second, just wait. It can just go off and come on. But if you have continuous maybe 2 minutes or so, you can't hear me properly, quickly alert me. So that if it means I should go out and come back, because if you can't hear me properly, even the recording, you will not hear me properly. So just check if it's me. Because as long as it's me, I can resolve it, maybe refresh the page or go out and come back so that our recording can also be proper so that you can benefit. Right, before I proceed, any questions on what I've said so far? No questions. Right, so now I'll go straight to the business of the day. Right, in our sessions, will always be an hour.
Sorry.
Yes.
I received 2 cell phone numbers that invited me to join the session. I just want to check which one is yours.
The one that invites you to the classes, that's the one that you use if you want to ask a question.
Okay, I must
with the content. But as long as it's any other question, you can also ask the other number. Anyway, the other number is always available near me. So even if you send a question to that other number, I can get it. So don't worry. So you can do communication with that other number or the number that invited you to the group. Like if you see the one that invited the other number that you communicate with, it might not be in the group. But even if you communicate with that number, you get to me.
Okay.
But if you have got technical, like the class questions, if you go direct to the number that sent the invitation for the class, then you'll be able to get me very fast.
Okay, no problem. Thank you.
But you can use any of those 2 numbers. We're always together.
Oh, okay.
So even if you send a message to that number, it will get to me. And if she can
even after the 3 weeks, I want
she
to
will also be able to attend. So don't even worry, any of those 2 numbers. But if it's questions of class, she might not be able to answer. Like you're asking a question of what we did in class, normally use the number that invited you to the class.
Okay.
Thank you so much. But even if you ask her, as I said, she will always pass it to me. So I'll see your question, even if you send to her. Right. Now I'll go to the details. Our module, you'll find that about 60% of our time will be the preparation of financial statements. Now, for you, when you are preparing financial statements, there are basics that have to be understood by the preparers of the financial statements and the users of those financial statements. There are things that they have to understand before you can be able to prepare financial statements and before you can also be able to understand what is in the financial statements. Now, to aid users in that aspect, the IFRS, the IASB, which is the International Accounting Standards Board, I refer to it here, they issued what is called a conceptual framework of financial reporting. The conceptual framework gives the basis or the foundation. When you are building a house, you need a foundation. So it's the basis or foundation of accounting, whereby even when new standards are being created, they will have to take into account these general principles that are covered within the conceptual framework. So it gives the basis. And you can never understand your accounting if you don't understand these first things that we're going to talk about. They might appear like theory, then you say, are we doing accounting? But as long as you don't understand these things, it might be difficult for you to understand accounting in future. So it is really important that you understand this foundation or the basis that is the bedrock of accounting. Right, the first version of the conceptual framework was produced in 2010. And this version was then replaced with a new version in 2018. Right. It's a frame of reference. So even the ISSB, when they are creating new standards, like we know that accounting, when I talk about standards, these are guidelines that help us to treat specific type of transactions when we are preparing financial statements. Right. What is the purpose of the conceptual framework? When we say what is the purpose of the conceptual framework, why was it created? Right. The conceptual framework was created to assist the IASB. The IASB is the International Accounting Standards Board. Let me give you a background. Long back, accounting could be done in whatever manner. Maybe let me just get 2 minutes to explore the history of accounting. Right, in the beginning, our forefathers, they were self-dependent. There was no business. The world they were living in, it was each man for himself. So if you wanted meat, you were supposed to hunt. If you wanted pap, rice, you were supposed to go to the fields and make sure that you have the pap and rice on your own without anyone helping you. So you were supposed to fend for your family on your own, maybe with your relatives, helping each other. I think we know the old settings whereby the brothers could even stay together with their wives and their grandparents together in one raw area and they share the food as a family, extended family. Right. But later, people saw that the productivity can only improve if you can do some of the things, not all of the things. If you do too much of anything, it makes you something else. Right. Just imagine if you were supposed to do everything that you need on your own today. You were supposed to wash, cook, read, attend this class, everything that you want, drive wherever you want to go. If you were supposed to do everything on your own, it was going to be tough. So they saw that, then they started to specialize now. Because they saw that for you to be productive, you need to concentrate on what you are good at. You need to specialize. When you specialize, you become a better person. If I just do accounting, I'll become a better person than if I do accounting, I do economics, I do chemistry, I do this. It will overwhelm me. I can't explore everything and be up to date with everything that happens there. But because I know my field, I only concentrate on my field. It's easy for me to research on that field, to have the time to make sure that I know everything that is changing and I know everything that is happening in that field. And I become a better tutor in accounting because I understand everything what is happening. So that's what happened. People begin to specialize. So if you are a hunter, you then specialize in hunting. If you are into agriculture, you specialize in agriculture. But now there were challenges that arose because of this a specialization. It then meant that you can't have everything that you wanted. Now, because you can't have everything that you wanted, you have to get what you don't have, which you need from others. You know that I'm doing accounting, maybe I can't start alone. Then you come to me and say, no, help me in accounting. Then I teach you in accounting, you write your assessments, you pass, you go on. You know that, no, I don't have time for washing. You look for someone, they wash for you, you pay them. You know that, so that was the thing. If I don't have meat, I go to a hunter. I tell him, Hunter, Mr. Hunter, I've got mealie meal here. The old form of business was barter exchange. Barter exchange, they were exchanging products. I go with my mealie meal, I specialize in mealie meal. You specialize in hunting. I come to you and I say, hey, I've got this mealie meal. please, I need meat. Then we just agree, okay, give me so many buckets of mealie meal, I'll give you so many kgs of meat. Then at the end of the day, you have mealie meal and meat, and I have mealie meal and meat. But later, people saw that this barter trade was not all that simple, as there were challenges. Number one, they were supposed to be what we call coincidence of the wills. What do I mean? For me and you to have a deal, I should have what you want and you should have what I want. But let me express it plainly. Let's say I have mealie meal and you have meat. The only way we could trade was if you needed my mealie meal and I needed your meat. So if you wanted my mealie meal, but I didn't want meat, there was no deal. We could not trade. Trade could only happen when two people want what the other person has. Two-way. I should need what you want. I should have what you want, and you should have what I want for us to have a deal. Right. Number two, every time they did the barter trade, they had to sit down and agree on the price. So there was a challenge here. So to aid that challenge, they introduced money. Old money was not the notes and coins that we know. It was pieces of silver and pieces of gold. Then now what do? Me, I have my mealie meal. I will just say my mealie meal is 20 rand or 4 pieces of silver. So you, even if I don't need your meat, you were just supposed to sell your meat to others and come to me with my 40 rand and I give you the mealie meal. And me, when I want your meat, I was not going to come with my mealie meal. I just sell my mealie meal where it's wanted and I come to you with my money and buy your what? Your meat. So trade was now better. Right. With trade improved now, there were some clever people, they saw the gap. Then you see, okay, in Mpumalanga, they need meat. There's no meat in Mpumalanga. They've got mealie meal. So people started to take meat. Let's say a meat is there in Joburg. They buy meat here in Joburg and go and sell in Mpumalanga. They get a profit. Then they buy mealie meal in Mpumalanga, they come and sell in Joburg at a higher price, they get a profit. So we now had people who are now operating business. There was no need for you to be a hunter to go into business. You could just have money. A hunter comes, you say, oh, Mr. Hunter, here's your money, I want your meat. You buy the meat, you go where there's a shortage of meat, you sell it at a higher price, you get money. Then that was the beginning of business now, big business. Right. Now the old form of business was a sole trader, whereby the owner of the business was the manager, was doing everything. So there was no need to account. Like just like you, if you open a shop, accounts are important. Yes, you need to go to SARS, pay tax. You need to also see what is happening in your business. But you can even do sometimes, if it is small, you can manage without even preparing accounts. That's why you see most Magogos, they don't do accounts, but their tomato business is flourishing. It doesn't end, it doesn't finish. It's always going on. They just know that I should not finish money for stock only. They don't even know how they got the past month. They just tell you that, business was good last week. If you tell them, how much do you make? They don't even know. Right. But later now, we now had people now, for various reasons, a businessman began to employ managers. There are various reasons why you can do that. Number one, you can have money, but you don't have business brains. If you see most people with money who are playing golf right now, some of them, they don't even know how to run business. They employ someone who is able to run someone's business. He cannot do things of his own. He has a degree and stuff like that. He goes and works there. Improves the company. Now, because of that, there was now a need for accountability. Someone is running your business. So you can't just let them run your business. They will steal from you. So from there, that's where accountability and accounting was now required. The manager was now supposed to go to the owner. When you go to the owner, you then say, you gave me 1 million. Out of that 1 million, 200,000 I paid rent. I took 300,000, I then bought a stock. I paid for electricity so much. The workers, I paid them so much. Then that was the beginning now of accountability and accounting. But now long back, if you come to me and you say, Eugene, prepare accounts for me, I will do them in one way. And next week you go to Robert, do accounts for me. You prepare in another way, which is different. that created confusion. Now, to avoid that confusion, that when accountants throughout the world came together and they formed one body, which is called the International Accounting Standards Board. Now, the International Accounting Standards Board, it's a board that is made up of accountants throughout the whole world. So they will now sit down that board and tell you, if you are an accountant, you have to register with us. And if you register with us, your accounts should be prepared in this way. So now at the end of the day, if you go to Egypt and look at the accounts, you will see that the accounts in Egypt and the accounts in South Africa are prepared the same way. The only difference is that in South Africa, there's a rand. In Egypt, there's the Egyptian pound. So that was the reason for having the International Accounting Standards Board, to have a way of doing accounting to be professionalized, to say we do our things this way so that everyone can understand how accountants do their work. So now, this board, they use the conceptual framework when they are developing new standards. There are changes that are happening in the business world. And you'd find that some of the ways that we used to account for some transactions will no longer be valid because of changes that happen along the way. And the board can see some loopholes in the past standards, so they can have to develop them. So when they are developing them, they also refer to the what? Conceptual framework, to understand the basics of the foundation. Right. The conceptual framework also assists in promoting harmonization of regulations, so that regulations for accountants are the same. They also assist national standard bodies in setting national standards. South Africa is its own cycle. There are also South African standards that are produced. So you'd find that local producers of standards, even those that produce for government, the PFMA and stuff like that, they can also be guided by the conceptual framework. Right. They also explain, the conceptual framework, it also explains some of the things that might not be very clear in the standards. You find in the standards, they can just state something that assets, but you don't know in asset. So how do you go and understand an asset? Go back to the conceptual framework. They also assist auditors. Auditors, you are asked auditing accounts. So you need to understand the foundation so you can be assisted by the conceptual framework. Right. Users, they can also use the framework to interpret what is in the financial statements. Right. And interested parties. I'm going to talk about them on how they can use the standards. And also, the conceptual framework also promotes the use of standards by countries. Like you see that, like South Africa, you'd find that in the Companies Act, they say that listed companies should follow IFRS. So by that, South Africa has adopted International Financial Reporting Standards. Right, we've got the older version, which is called IIS. So if you see IIS, these are the older ones. Some of them are still working, but some of them have been changed. The new versions are called IFRS, International Financial Reporting Standards. But as I said, we still have a lot of IAS that are still working up to now. Right. Any questions? Right. Now we are going to go to the objective of financial reporting. As we said, most of the time in our module, we'll be dealing with the financial reporting. Why is it accounts have to be prepared? Why is it financial reports have to be prepared? Right. The main reason that we prepare financial statements is so that we can give information to users. We prepare financial statements so that we can provide information to users. And these users would then use this information to make economic decisions. So the reason why is to give information to users, which these users can then use that information to make decisions. And the conceptual framework identifies two main groups: investors and potential investors. What are investors? Investors are all those people who have invested their money in the business, shareholders. If you're a sole trader, you the owner of the business. And what are potential investors? Potential investors are those people who have got money and are searching where they can invest their money. Right. What do these people need? These people, they are interested in assessing the risk and returns associated with their investments. They need to know how much they are getting from their investment. They need to make a decision on whether they should take out their money. If you are not happy with the performance of the company, you take out your money. You can also make a decision to increase your money because you are happy. You can even further increase. Or you are worried that without capitalization, I will make a loss, so you increase the money. Even if a company is not doing well, you can be able to see that, oh, it's not doing the well because the capital is not enough. So what do? You add the capital. Right. You can also use the a financial reporting to decide whether to maintain the money that we've invested in the business. To just maintain it. So that I don't take it, I don't increase. I just keep it there because the investment is worth it. And also to assess the risks. That is the potential that you can win or lose. So investors, financial reporting is produced so that investors can make a decision on whether to put in more money, whether to withdraw their money or to keep their money in the business, and also to assess risks. The other group that is identified is lenders and creditors. With banks, where we borrow money. Individuals from whom we borrow money. We can borrow from the government. We can borrow from other businesses. We can buy on credit from other suppliers. All those are interested in the financial statements. What do they need? They need to see if the business will be able to repay whatever we're owing them. We look at the financial statement. I think some of you have taken debts from these financial institutions. They will say, give us your pay slip. What do they need to check from your pay slip? They need to see how much they can give you. And they need to assess, okay, would this person be able to pay us? Then they can see, okay, give us the past 3 pay slips. Then they say, okay, he was getting 20,000. So we can easily borrow 2,000 because they can be safe. They can be able to pay. So lenders and creditors, they need the financial statements so that they can see how much they can give you, and they can assess if you'll be able to pay, and they can assess whether they can demand their money. Remember, some banks, they'll give you conditions that we are giving you this money on condition that every year your profit should be 20%. If it's not, we'll ask you to pay our money immediately, although it's a 5-year loan. So they want to see if you are meeting the requirements or the purpose for which you applied for the loan. So these are the two main users that are identified in the conceptual framework. But let's also understand that they are not the only users. There are also other users. Who are the other users? Right. We have got government. Government, they need financial reports so that they can also tax you. They need tax. So from your financial statements, they can be able to calculate how much you owe them. They also need, remember that they are concerned about the growth of business. They also need to see the national statistics, what is happening in business. Are our businesses doing well financially? So they'll be interested in the financial reports. Right. We have management. Management are responsible for planning, organizing, leading, and controlling the company. And for them to effectively play their role, they need an understanding of the financial performance of the company. So they might also need an understanding of the financial statements. Right, we've got employees. You as an employee, you'll be interested with the financial performance of your company for job security. You know that if your company is not doing well, then you can as well look for another job. And also when you are negotiating a salary, you can refer them to the financial statements, guys. You can see in the financial statements that we worked very well. Our profits have improved by 30%, and we are just asking for a 12% increase. Please, can we compensate us? We need a bonus from the financial reports. You made so much profit. Why can't you give us just the 5% of those profits as a bonus to the employees? So employees will also be interested in the financial performance. A customer, if you're a customer, you are interested in the financial performance of your supplier. Why? You need to assess their ability to continue providing what they are providing, especially big customers. You know that if the business is struggling, they might even fail to supply you. Actually, big customers, they can even give a loan to their supplier who is supplying them if they see them struggling, so that you can guarantee that you get your things. Maybe he's providing better quality at a reasonable price, so you can't afford to see him fail. You can even give them a loan so that they can pick up. So as a business, you need to understand also, as a customer, you can also need to understand the financial reports of your supplier, of your supplier. Then suppliers, those who are selling to you, they also need to understand your success. If I teach you, I'm interested in your results, because your results will tell if I'm doing a good job or not. That's why you see sometimes at the end of the semester, we ask our students, what were your results? What can we do better? So as a supplier, you know that if your customer is doing well financially, he will order more goods from you, and your business will also grow. When your customer grows, you are likely to also grow, because they will buy more goods from you. So that's why suppliers are interested in the financial statements of their customers. And suppliers can also be creditors at the same time. They can be selling on credit, so they might need to assess the ability of the customer to pay. Then we've got the general public. Right? If you are not related to a company in any way, you may also be interested in the financial affairs. Let's say you come from the Northern Cape and you work here in Pretoria, or you are in KZN, but you know that there's a company making a lot of money in your rural area in Northern Cape. You might need to see the financial statements. What are they doing? What are they doing in terms of CSR, corporate social responsibility? From the profits that they are making, how much are they spending towards the activities of the community of the Northern Cape? What are they doing for that community? So we've got many users. So although the conceptual framework identifies these two, there are many users who are interested in the financial statements. So because of these users, the conceptual framework guides them, gives guidelines for users to understand how to interpret the financial statements. Of course, we don't expect all users. I think 2% of users actually refer to the conceptual framework. The 2% even know that it exists. But if you don't understand and you want better understanding, you go to the conceptual framework. So for you guys to also be able to do accounting, you need the understanding of the conceptual framework. Hence the need for the conceptual framework. Any questions? Right. If we don't have any questions, then I'll go to the qualitative characteristics.
So far, so good. Thanks.
Yes, sir.
Now I was saying so far, so good. No question. Thanks.
Okay. Thank you, sir. Right. Then we'll go to the qualitative characteristics. Right. Accounts are prepared. As I said, there are many users that from the section that we just came from. There are a lot of users who are interested in the financial statements. And it's unfair for us to give them information that is not adequate. So at the end of the day, we have to give them adequate information. Right. Because of that, the conceptual framework gives us the qualitative characteristics of useful financial information. So for us to say these financial statements are going to be useful to the users, there are minimum characteristics that have to be met, which we call the qualitative characteristics of useful financial statements. So for us to say these financial statements are useful, there are minimum characteristics that have to be met. What are these characteristics? They are divided into two types of characteristics. We have what we call the fundamental characteristics, and we've got the enhancing characteristics. The fundamental, these are the main characteristics of which, if they are not met, we can simply say the financial statements are useless. They can't serve the purpose for which they are prepared. These fundamental characteristics are two. Number one, faithful representation. An accountant should provide financial statements without bias and with honesty. They should not do what we call cooking the accounts in street language. What we also call window dressing the accounts. If you don't know, in the companies, accountants will be under pressure. Remember, management, they want the board to say that they are doing well. If management are not doing well, if accounts are not well, it might be interpreted as if the management are not doing well. So a management may be motivated, maybe not are motivated always, it's not always, may be motivated to influence the accountants, to cook the accounts, to present a positive outlook, report a profit, report a liquid position, report a solvent position, so that the shareholders will be happy, the board will be happy, and outsiders will be happy, and they'll buy shares. I think we had an issue of the state of case a few years ago, whereby accounts were cooked, so that shareholders will think that the company is doing well, which led to the share price going up, and people bought those shares on the understanding that the company was doing well, but there were intercompany loans that were hidden as revenue. By the time that it was discovered, the share price fell hardly, and shareholders lost billions. A few years ago, if you follow the news, with issues like VPS Bank, we remember that the financial statements, there was someone from KPMG who got loans from VBS, and he was a partner there, and he influenced the financial reports of VBS. They were being reported as positive, but VBS had no money. And people continued to deposit their money on the understanding that VBS was doing well. So at the end of the day, you are supposed to present the picture as it is. So as an accountant, if the company is making a loss, report that loss. Even if management tell you, please, can you just try to maybe remove some expenses, add some income so that it can be positive, you say no. Maybe they want a loan and the bank wants a certain profit, you will say no, because if you do that and you are caught, you can be scraped off the SICA, your SICA registration. If you are registered with SICA, you will no longer be allowed to practice as a CA. So according to the conceptual framework, accountants should prepare without bias. Even if there's a result that you want as an accountant, if it's not there, report what is there, not what you want. So for them to be faithfully represented, they should be complete. What do we mean when we say they are complete? Report everything that is important. Don't leave out anything that is important. Not, I'm saying everything that is important. You might find that practically in a big company, there are some things that might not be reported. You might buy floor polish. You can't have on your statements floor polish. So some things can be bunched together and they can be called sundry expenses. But we're saying everything important should be reported separately and should be shown, should not be left out. So information should be complete. So information is complete if all phenomenon, everything about it is disclosed. For example, if you buy a building using a loan from ABSA, and the loan is for 20 years, and the building will only become yours after the 20 years. As an accountant, You should show the building, yes, as an asset, but you should write a note and tell the user that that building that you saw under the assets, that building, we bought it with a loan, and that loan still has 7 years to pay. We are paying so much a year. Now information is complete. If you just say building, you want to apply for another loan at FNB, you will be given a loan. But FNB does not know that that building cannot work as security because it's already security at ABSA. But if you tell them when they are dealing with you now, FNB, they will know exactly that, okay, this is this and that. Right. And it will be free from error for it to be effectively represented. Right. For big companies, as I said again before, it's impossible to be completely free from error. But you are saying if there are any errors, there should be small areas that will not influence the decisions of the users. You should make sure that if there are any errors, they should not be material. So try by all means that there are no material errors in your financial statements. Neutral. You prepare information without any premeditated or preconceived required outcomes. Don't let your personal biases, your personal interests affect the financial statements. Maybe you've been promised that you get a bonus if the profit is 20%. Then you try to push up the profits, understating expenses, increasing incomes, so that you get the 20%. Right. So that you get the bonus. Sorry. So for information to be effectively represented, it should be complete, both in figures and descriptions, and it should be free from error, and it should be neutral. Right. Then relevant. You should only report information that helps users in understanding the financial affairs of that company. That's what we say when we say it's relevant. It should make a difference. Don't waste your time on information that will not make a difference. That's where we have the concept of materiality. Materiality, we're saying you should only present information if it's material, if it's important for the decisions of the users. That's why you will see that we round off figures to the nearest rand. The cents will not make a difference, the cents that are there. That's why, for example, you know that some organizations will have smoking area. In that smoking area, there will be ashtrays. Ashtrays, by their nature, that they stand, they will be used for more than 10 years or so, or 20 years. They can be classified as an asset because they'll be used for more than one financial year. But because of that, they are not important. They are not important things, and their cost is very small. It's not necessary. When you buy them, you just expense them in that very year of acquisition, although they will be used for many years. Because it's irrelevant. That's why when you buy milk for our employees, you won't see the financial statements saying milk. They can only be maybe one line item staff refreshments, which will include milk, tea leaves, sugar, everything. Or it can be sundry expenses, which will bunch all these small things. Why? They are not material. We can't waste our time giving 100 line items in our financial statements when these are just small things. So information should give value, should add value to the users of the financial statements. That's when we say it is what? Relevant or material. Right, then we've got what we call enhancing characteristics. Right, enhancing characteristics, they support the fundamental characteristics that we talked about above. They support the fundamental characteristics that we talked about above. right? Therefore, right, number one, with timeliness. Financial statements should be prepared on time, whilst they can be able to be capable of influencing the decisions of the users. I'm teaching you FAC, and you should be done by June or July. I think the last assessment will be July or June. Earliest June, latest July. And if I teach you well, you understand, but I finish the syllabus in November. That means you still have to carry over some studies to next year. Although I did well, but the time is not right. You have got your targets. You need to be done with this module this semester. So I should plan my things in a way that it should be done by this semester. So financial information should be produced on time for it to make sense. Then we've got a understandability. Information should be, remember that most of the users are not even accountants. You are producing, some of them, they are doctors, engineers with money. Some, they never even passed grade 10, but they made money and they invested. So they need to see what is happening with their money. So when you present financial statements, you should not just put too much jargon of accounting, which will make them confused. Of course, they don't have to have knowledge of preparing financial statements, but at least they should read. I think most of you are just studying accounting, but because of your average understanding from school, you can be able, if you are given financial statements, you can read that, okay, their sales were so much, their profit was so much, their assets are so much. Although you can't prepare them, but at least you can understand what they are reporting. So you should understand the diversity of the users. So present your financial statements in such a manner that an average user can be able to understand. Of course, not everybody can understand, but an average person who just did the English at school, who can read and write, they can be able to read what you are saying and tell what you are saying. So there should be clarity, cohesion, logic in all that we are presenting, so that the users can be able to understand. Right, then there's also verifiability. Different people reporting the same thing should arrive at the same conclusion. That's what we mean when we say it's verifiable. That means if I'm an accountant and James there is an accountant, me and James can be able to look at that information and report it in the same manner. And also, it should be corroborated by evidence, other evidence. For example, if in the financial statements, if I report that there were 5 million sales, if they ask me, let's see the invoices, let's see the receipts that you sold those goods, and if they are obtained, they should add up to that 5 million that are reported. That means it's verifiable. If we are saying we bought a vehicle for 2 million, if someone goes to that company where we bought the vehicle, they should be able to see that the type of vehicle was costing 2 million at the time of sale. And that company should be able to verify that truly our company bought the vehicle. So we should not just report fictitious things. I think that's where you see municipalities coming in. They say that they unauthorized expenditure and stuff like that. When they say unauthorized expenditure, it doesn't mean that it was not authorized sometimes. It simply means that everything to support and verify the authorization was not available. The manager can even say, I knew it and I told them to do it. But as long as we don't have evidence that supports that you authorized, you signed, then we can't say you authorized. It's unauthorized. So we're saying everything that we report should be supported by sufficient appropriate evidence for us to say it's verifiable. Then it should be comparable. Financial statements should be prepared in a manner that it can be compared from one year to another. We can't compare a donkey and a cow. We should only compare donkeys or cows together. What do I mean here? Right, so that means if we take the financial statements from and this year, they should be prepared in the same format. If our expenditure was divided by nature, this year it should also be divided by nature. Right, we've got what do I mean here? We've got different ways in which you can classify our expenditure. We can classify by nature, whereby we show rent, salaries, wages, stationary purchases by the nature of the expense, or we can present them by function. Admin, so all admin costs, whether they are rent, salaries, they will just be called admin costs. Right. So it doesn't make sense that last year we used it by nature, and then this year we use it by function. So users cannot compare to see what happened to the wages here. So if we're using nature last year, use nature so that they can compare. They can say, okay, wages were 2 million last year, this year were 2.5. Why did they increase? Inflation, salary adjustments, or there was growth? So they should be presented in a way that they can be compared. And comparability also extends to consistency in policies. There are different things that organizations have got an option in accounting to choose a policy. For example, what we call depreciation, which is you can use what we call the straight line, or you can use what we call the reducing balance method. Right. So if you used on vehicles, if you used a straight line last year, you should use straight line this year, because it doesn't make sense to compare depreciation on straight line from last year to reducing balance this year. There should be consistent in our application, unless if there is a justification to change. Unless change is inevitable. So we should be consistent in our policies, and we should also prepare the accounts in the same manner from one period to another. Right. Then we move on to general assumption of accounting. Right. The general assumption when you see financial statements is that the business is a going concern. What does the going concern assumption say? Whenever I'm given financial statements, my assumption is that those financial statements are for a company that will continue operating into the foreseeable future. There are no plans to close it. So it will be there next year, but 5 years to come, 10 years to come, unless told otherwise. So whenever I see accounts, my assumption is that the business is not winding up, the business is not liquidating, it's continuing to operate. That's the going concern assumption. Right. Forms of business. We have different forms of business. We have sole trader. A sole trader is a business that is owned and managed by individuals. The Magogos that sell Magwinya, who run their own business, are sole traders. Most of these spaza shops, they are run by sole traders. You can just decide to open it. There are no complications in the registrations. I think because of the things that happened last year, that's when we saw them registering. But otherwise, you could just form it, start your business. You can just wake up tomorrow and start selling Magwinya. You can just convert, maybe at your house, you just build a tuck shop there, you start selling. There are no complications. And usually the money required to operate such a business is not very huge. Right, we've got partnerships. Partnerships are businesses that are owned and operated by 2 up to 20 people in an unincorporated manner. So the business is not a cooperated business, and it's not a person on its own. It's under the individuals. Right, we've got a company. A company is a business that is registered in terms of the Companies Act 71 of 2008. This one has to be registered in terms of the Companies Act 71 of 2008. So you have to register your company for it to be called a company. Then we've got a close corporation. A close corporation is a business that is registered in terms of the Close Corporations Act 69 of 1984. Right. But you should note that you can no longer form a close corporation now. They were being formed long back, but they can no longer be formed. From 1 May 2011. But why do we talk about them? Because we still have those that were formed prior to 1 May 2011. They are still operating. Right. Then financial statements. our module, as I said, 60% of the time we'll be preparing financial statements. Actually, from next week, Saturday, I believe I will be starting on financial statements of a sole trade. Financial statements, we prepare about 5 financial statements forms. We have statement of profit or loss and other comprehensive income. This is the statement in which we determine the profit or loss made by the business. We have the statement of changes in equity, in which we determine how the equity of the owner is changed during the period. We have got the statement of financial position, which shows the assets, liabilities, and equity of the business. We have got the statement of cash flows, which shows how cash has been generated and how it has been used by the business. And we've got notes to the financial statements. Right, there are some things that are summarized. For example, property, plant, and equipment. On the statement of financial position, it will just show property, plant, and equipment. It will include vehicles, buildings, furniture, all of them, one figure. But we then have notes that will now break down that of that PPE of 2 billion, 500,000 is vehicles, 300,000 is buildings, 200,000 is furniture, and all those things. Right. Any questions? Right. If we don't have any questions, that will be the end of the session today. In our next class, we'll be looking at elements of the financial statements. We need to understand what are assets, what are liabilities before we go to the financial statements. Because we can't do the financial statements when we don't understand that. But of course, we did that in 1502, but we have to remind each other. But we know what is an asset, what is a liability, what is equity, what is this. That will be what will be covered in our class on Tuesday. Any questions? Right, if we don't have any questions.
No, thanks. So
yes.
So far, I'm saying so far, I'm really enjoying this. You're explaining it in a way that one can understand, you know. So I'm looking forward for Tuesday. So you're saying around 5 in the evening? Okay, cool. Great start, man. Thanks.
Okay, thank you. I will post the recording and the notes in the group by today or latest tomorrow morning. And please go over before the next class the little that you can do so that you can be up to scratch. It will just look at what we've looked at today so that you can be keeping up with the pace. If you miss a class, make sure that you go on the recording. Thank you so much, guys. God bless you richly. Enjoy your weekend.
Same to you, sir. Thanks, man.
Yeah, same to you. Thank you.
If you are Amakos, I wish you all the best. Because
okay,
I'm Thunderman. That's why I wish Amakos all the best. Okay, enjoy your weekend. Thank you, guys. God bless you richly.
Same to you.
Bye.
All right, thank you so much for attending. All right, you should know that we at Eugenius Educators. Those are our contact numbers in case you want to join us, our classes permanently. In case you want to join us permanently, let me just make sure that our numbers are appearing on the screen. It's still processing. Right, just a second. Just a second, it's still responding. I think it's network issue on Zoom. It's sharing. I just want you to see those will be the contact details if you want to join us permanently. We actually offer tutorials in accounting, auditing, tax, AIN, CAS from first year up to third year. We do classes every week. Every week we do our sessions at least once for each module a week. So at least once to twice. We also offer revision classes towards the end of your semester. That means when you are doing revision classes, we also offer. Okay, so those are our that's the email that you can contact us. Then those are the numbers that you can contact us in case you want to join our classes. Then you can WhatsApp us, and then we can be able to tell you how to join us. We offer a variety of modules, as you can see there. So those ones are the ones that are currently being offered for classes, but also there are others. If they are not even here, you can also contact us and we can see if we can help. If we can't help ourselves, we can be able to link you with our partners. We work with some guys who also offer the same studies. So if what you want is not there, you can still contact us and we can refer you to some who also offer the same service. Right? We do our classes throughout the semester, and for year modules we do throughout the year. We just take off usually during holidays or if there are reasons beyond our control. So if, like for example, if there is load shedding, we compensate the classes. So if you want to join us so that you can be able to have access to all our classes, as I said, you can use any of them. Contact details that are on your screen. Thank you so much, and God bless you richly.